What is up, guys? It's Darren Jackson. Happy New Year. Hopefully you had a great past couple of days, and I really do hope that this year's a lot better than last year, but we'll just have to see. I wanted to start this year off by talking about a stock that I talked about a couple of times last year. I pretty much said if and when I invested to this particular company, it will be the most speculative play that I've ever made, ever, and that stock is FRX.U. I'm also talking about it because someone that's a potential subscriber, thank you by the way, actually asked me if I could make a follow-up video about FRX, giving you insight on what's been going on with them since. So that's what I'm gonna do. More specifically, we're gonna recap what FRX is. I'm obviously gonna give the update, I'm switching hands. I'm obviously gonna give the updates on the company themselves. I'm also gonna talk about what a warrant is. That seems totally left field, but just stick with me because what a warrant is, the definition of that and how it works has a lot to do with this particular company and the decision I'm gonna make on if and when I'm going to invest into it, which is the fourth thing that I'm gonna talk about. And hopefully that gives you some insight and maybe gives you an idea of how you're gonna handle this as well if you choose to. But remember, I am not a financial advisor. This is all entertainment purposes only. I'm trying to take a boring subject and make it a little bit more appealing with random hand motions and a personality that seems kinda outgoing, even in comparison to like a brick wall or something, but we'll see how I do, so let's get started. So quick recap, FRX is a SPAC, a special purpose acquisition company, and their goal, just like any other SPAC, is to acquire a company that is within basically the same niche as that particular SPAC is. Now this SPAC's niche is within the TMT industry, which is technology, media, and telecommunications, which makes sense because their father company or their sponsor company, which is Forest Road, is a company that pretty much lends money to other different industries, including media companies. They're responsible for lending money to production companies that have made some pretty popular, or I guess semi-popular movies, depending on what your types of movies that you like are. But that's pretty much what they do. Now, mind you guys, I'm a new investor. I'm gonna say that a lot because I am, and I really wanna communicate, especially to those of you guys that are new or just anybody in general. But with that being said, it's very possible that there are a lot of tips and tricks and secrets to researching a company right before it becomes a SPAC to see if it's even worth investing into. And maybe I don't know this thing, but there were two major things that made me really interested, made me say in my old videos, I'm willing to invest at least a couple of shares into them. One being the opportunity to invest in a SPAC at the very beginning, because last year especially, we all became witnesses on what the price of a SPAC does from when the actual company that they're merging with is announced and that smooth transition to the actual merge itself in the aftermath, and that stock could just shoot up. And from $10 a share, that's a big jump. The other reason why I was really interested in this company is because of their executive board. Now I'll put the list up of the board themselves. You can obviously see that one particular celebrity that makes this even more interesting, especially considering his past investments. But I'm not gonna go into complete detail of that right now. If you are interested, make sure you watch these two videos. The first video is the very first video I made on FRX, which by the way, is the first video that a finance YouTuber has made on this stock ever. So, you know, I wish there was a trophy for that. But also watch the second video. I go over the executive board deeply in both of those videos, so make sure you check those out. But regardless, that's FRX. Now the updates, what you've all been waiting for, or maybe not, but whatever. The updates with FRX are, you know, pretty much nothing, to be honest with you. I looked on their website and the last update they made in regards to investment stuff was nothing. And I checked on Google for anything relative to FRX. The last article was in December, nothing really at all either. So there you are. They've really done nothing. I'm pretty sure they're just keeping their heads down while their bank accounts increase after they're raising money with having their stocks in the stock market. Speaking of which, what is a warrant? Now I wanted to talk about a warrant because as I was looking at all the information, even from when I first heard about this stock and I was looking at their SEC filing, I saw a warrant on there, and that was the first time, or one of the first times I ever seen it. I've done some studies before and I've seen warrants, but back then, I didn't really have too much of an understanding then. So in the past, when I first heard about a warrant, my understanding was that a warrant is basically an option that you can do, but you can only do directly with the company and not through a broker like Robinhood or Webull and stuff like that. That's basically right, but now I can elaborate just a little bit more, and hopefully this all makes sense, especially after I include the examples and how it benefits the company themselves and the investor. Before I go into the kind of the definitions, there are two different types of warrants. Well, there's four, but the two most popular are the callable warrant and the put warrant. Makes sense, like call options and put options. Now we're gonna focus on callable warrants because according to my research, that's the most popular with SPACs and what they offer if they offer warrants. A callable warrant is the right to purchase a stock at a discounted price. And with a callable warrant, you have the right, not the obligation, to exercise that warrant to purchase that stock at a particular price before an expiration date, which can be months or even years after that company IPOs. Normally, that exercise price is $11.50, and it's normally, when it's announced, more expensive than, or a higher price than what the actual stock price is. I'm trying to figure out how it benefits the company. Took me a while, but I think I understand now. Basically, warrants, especially callable warrants, help the company make more money. And that's more significant than what it seems in the surface. What a warrant is, it's basically adding more shares of stock from that company. But warrants aren't available in the stock market. That's just direct with the company. Now, with Forest Road Acquisition situation, they have about 28 million shares within the stock market. But every share that you buy at Forest Road Acquisition gives you a third of a warrant. So if you buy 3, you have 1 full warrant. So basically, they have 28 million public shares, but they have about 9 million private warrants that you can obtain as you buy those shares. And those warrants, by the expiration date, you can redeem for $11.50. So what companies are basically doing is they're adding more shares available to be bought and then be exercised so they can gain that money, but they're not diluting the stock market because they're not public shares. Diluting the stock market, a good example is back when Apple and Tesla announced their stock split. They took the amount of stocks that they had and they multiplied them by 4 or 5, which took the stock prices of what they had and divided them by 4 or 5, which that happened because the market price isn't supposed to change, it just made it more appealing. If Forest Road did that, you would have to rely on the interest of the company for them to shoot up. But they're not doing that. They're just offering you more options so they can give them more opportunity to make more money. So that's how it benefits the company. Now, from my understanding, the biggest benefit for an investor is that it pretty much gives you more leverage when it comes to investing in the company. It gives you the opportunity to kind of try it out, kind of like how you test drive a car before you actually buy it. You have the opportunity to see, okay, I think I like this car, instead of having to buy it and then dealing with the consequences from there. For example, and I'm gonna try to make this the best example that I can. Let's say you bought Forest Road, just the regular stock, at what it's currently at, I think about $10.50. And let's say it grows to $20.50. You bought 1 share and you got $10 profit. Great, congratulations. But let's say you bought a call warrant and the charge for that call warrant was $5 and it shot up to $20.50. You essentially just bought a stock that shoots up to the same price as a regular stock, but you bought it for a cheaper price because you bought a callable warrant. So technically you experienced more growth, and because you bought that stock at a cheaper price, you would have had the opportunity to buy more shares of FRX or Forest Road Acquisition for a cheaper price as opposed to buying it at $10.50 per share, which would have given you a smaller amount of stocks if you invested the same amount of money. So it gives you the opportunity for that. However, if the stock price went down, then you're pretty much out of luck. And the warrants themselves, if they don't reach that strike price, which I said earlier was $11.50, they pretty much don't matter anymore. That's the best way I can put it. It pretty much gives you the opportunity to buy at a discounted price. And if it rises even past the strike price, then you're in a great position. Keep in mind, guys, if you guys didn't really understand it, but you do want to learn more about it, please let me know in the comments below. I will study this even more so I can bring out a video specifically focused on warrants and their pros and their cons. So now that we know, or at least I guess I know a little bit more about warrants, my decision on what I plan on doing with the stock as far as investing into it has changed a little bit since I talked about it a couple of months ago. There was a lot of obstacles for one that helped with this decision, such as I finally realized I couldn't invest through Robinhood because Robinhood doesn't support warrants, and as of this year they won't support units. Webull actually shows you the stock, but at least for me, I couldn't invest into it. The only companies that I'm aware of that allow you to invest into warrants are Fidelity and I believe TD Ameritrade. So the restriction on that is a little bit tough. But eventually, this company is supposed to split up into the warrant side and the common stock side, again, according to the SEC filing. So when that happens, the common stock ticker symbol will be FRX, and the warrant side will be FRX.W, I believe. So when that happens, it should be available through Webull and Robinhood and maybe even M1 and stuff like that. So with that being said, since my comfort level with warrants, as far as my experience with them and me 100% knowing and understanding what they are isn't completely there yet, I would be more comfortable investing into this company once that split happens. Now, when does that split happen? I don't know. I couldn't tell you. It doesn't really announce it on the site, but I'm going to hold off and wait because I could easily just invest into it now through Fidelity and get those third warrants and invest in 3 shares and get 1 full warrant. But then I would have to learn how to exercise those if I choose to. Obviously, I could do nothing and just sell them as common stock, or I could actually learn how to do it and sell them as warrants and get that $11.50 per share, which could be beneficial and it could also not be, depending on what happens. But I'd rather avoid all that and just kind of learn about warrants on the side, so if that situation like this happens again with the SPAC, which I believe happened with Hyliion, then I'll focus on it then. But my personal opinion, I feel like it's best to wait until that split happens to where Forest Road is a publicly common Class A stock. And if you're actually interested like I am, then invest into it from there. And then at that point, you get all your voting rights. And if they offer dividends eventually, once they merge with companies and years go by, then you can get the dividends and stuff like that. So that's my opinion on Forest Road. And hopefully this video helped you learn a little bit more about what a warrant is, or maybe you're thinking this guy doesn't make sense, doesn't know what he's talking about. But again, if you want to hear more about warrants and you want to listen to me talk about them, please let me know in the comments below. I will study this as hard as I can so I can bring you guys a high quality video. But speaking of videos, make sure you watch some of these other videos that I made last year, a whole year ago, it's crazy. And hopefully they help you in your investing journey as they have in mine. I really do appreciate you guys watching. I really hope we have a great year, and until next time, take care.